PantheonAI presents Crypto Surge, CapEx Supercycle unfolding, Robinhood hits regulatory roadblock. Good morning, everyone, and welcome to the PAI Morning Briefing. I'm John, and with me, as always, is the brilliant Sarah. Today is July 11th, 2025, and do we ever have a lot to unpack, from the latest moves in our major indexes to some fascinating global market narratives? Let's just dive right in, shall we?
Absolutely, John. Good morning to all our listeners. I'm ready. We've got quite the mosaic of market sentiments today, don't we? So to kick things off, what's the quick market overview looking like?
Well, Sarah, let's start with the S&P 500. It's trading at approximately 6,261.47, posting a modest gain today, about 0.09%. Not a dramatic move, as you said, but sometimes those tiny nudges are the early whispers of bigger trends, right?
Right, it's like the market's just clearing its throat before it really starts to sing. Or maybe hum. What about the Dow and Nasdaq? Are they also just humming along?
Not quite. In contrast, the Dow Jones is actually down a bit, standing at around 44,343.62, having retreated by nearly 0.3%. Meanwhile, the Nasdaq is showing some resilience at roughly 20,623.68, up by almost 0.3%. And over on the Russell 2000, we see a slight dip as well, with its price sitting near 2,241.7, down by more than 0.5%.
Interesting. So a bit of a mixed bag in traditional equities. But what about the crypto world? Because that's where things have been a bit more lively, shall we say.
Lively is definitely the word. Bitcoin is making some serious noise at approximately 117,363.625, marking an impressive gain of around 1.19%. And right alongside it, Ethereum is trading at nearly 3,000, specifically 3,000.93, climbing by just over 1%.
Wow. It certainly appears that the cryptocurrency markets continue to offer intriguing contrasts to traditional equities. It really makes you wonder where these digital assets might be headed next, doesn't it? It's like they're playing by a different set of rules sometimes.
They really are. So what are these numbers really telling us today, Sarah? At first glance, it's that typical mosaic of market sentiments. The broad index gains and losses are reminding us that even when not much is moving on the surface, there can be underlying ripples that hint at more significant shifts. Investors should always take note of these subtle movements. After all, sometimes the smallest percentage change can precede a more pronounced adjustment tomorrow or in the coming weeks.
That's a great point, John, and it brings us to a deeper look at these trends. Over the past few days, we've actually been seeing a cautious optimism in the equities markets. The S&P 500's slight uptick, albeit modest, might signal that investors are gradually shaking off some of the uncertainties that have weighed on earlier sessions. But then, conversely, the Dow's weakness might reflect some lingering apprehension from market participants who prefer safe haven assets amidst the current economic climate.
It's a delicate dance, isn't it? And it's particularly interesting to note that while traditional stock indexes have been playing this dance, the cryptocurrency arena seems to be gaining momentum. Bitcoin and Ethereum today are not only higher in value, but they're also sparking conversations regarding potential institutional interest and broader adoption trends. It makes you wonder, is this a sign of an unstoppable digital revolution, or are we witnessing a momentary surge driven by speculative fervor? Those are big questions, especially when you think about asset allocation and portfolio diversification.
Absolutely. And speaking of big questions and fascinating trends, let's transition to a comprehensive dive into some of the most important stories making headlines today. Our news carousel includes a mix of market insights, corporate developments, and investor takeaways that are sure to keep any trader or investor on their toes.
All right, first up, we have a familiar face, Jim Cramer's recurring top 10 list this morning. Yes, once again, Jim Cramer is stirring the pot with his top 10 things to watch in the stock market Friday. The recurring emphasis on this piece indicates that the market is in a state of cautious prelude, with many expecting a lower open after a celebratory close on Thursday. It appears that Wall Street is positioned to retract a bit after achieving record-high closes for both the S&P 500 and the Nasdaq. Jim's insights, as always, remind traders that even when the market looks bullish, there is potential for a temporary pullback as profit-taking sets in. It's a bit like reaching for that extra cookie from the jar when you know you might regret it later. Sometimes the best move is to wait and savor the moment.
That's such a perfect analogy, John. It's that classic market wisdom, isn't it? Don't get too greedy. Now, next up, we have an intriguing series of news articles, all focused on a theme many of you have been wondering about, the notion of a capital expenditure supercycle. This is currently in the limelight, as BNP strategists are urging investors to rethink their targets.
Yes, their strategy note, aptly titled Running It Hot, is setting a bullish tone for both the S&P 500 and the Eurostoxx 600. The projection stands at an optimistic target of around 6,700 for the S&P 500 in the coming 12 months, with the Eurostoxx 600 expected to hover near 590. BNP believes that robust capital spending, fueled by supportive government policies, is setting the stage for a significant upswing. This supercycle could very well be the engine that propels equity valuations higher, suggesting that when governments are, quote, running it hot, it might just be the perfect time for investors to re-examine their exposure to cyclical and growth stocks.
That's a huge forecast, and it really speaks to the power of policy. But shifting gears a bit, in other news that cannot go unnoticed today, Robinhood is under the spotlight. Once a darling of the retail investing community, Robinhood is now facing challenges as its stock dips amid probing from Florida's Attorney General over its crypto subsidiary.
Right. Reports indicate that while several crypto-related companies are experiencing surges in their market valuations, thanks in large part to a renewed interest in digital assets, Robinhood stock is taking a hit. The investigation into Robinhood crypto has undoubtedly cast a shadow over the firm. Could this be a temporary blip or a sign of deeper regulatory hurdles looming ahead? Investors are left to weigh the benefits of accessible trading platforms against the ever-widening net of compliance and regulatory scrutiny. It's a reminder that innovation in finance often comes with its own set of challenges, much like trying to eat a slice of pizza while on the run. It might be delicious, but it's not without its spills.
Oh, the pizza analogy is perfect for that one. It really is a tricky balance. And then there's the piece on option strategy in the tech sector, particularly regarding Nvidia. With Nvidia's shares reaching record highs, some investors have expressed caution about rushing into a direct buy position due to the elevated valuations. But there are alternatives, aren't there?
Absolutely. Option strategists are stepping in to offer alternative pathways. Rather than betting solely on the stock's upward movement, these experts suggest employing options as a hedge to limit risk while still capitalizing on potential gains. This approach highlights the adaptability in today's investing environment. It's a bit like choosing between driving a race car or setting up a safety net while aiming for the finish line. The idea behind these strategic options plays is to balance risk and reward gracefully, providing investors with tools to navigate an increasingly volatile market landscape.
A safety net for your race car. I like that. And we're seeing sustained discussions about the impact of government policies on market targets. With this, quote, CapEx Supercycle theme coming through multiple times in our headlines, investors are being gently nudged to reconsider their long-term expectations. BNP's augmented target prices aren't coming out of thin air, are they? They reflect a confluence of factors.
No, they're not. It's corporate earnings recovery, governmental fiscal policies, and a re-energizing global growth outlook. There's a healthy dose of optimism infused with caution, advising us all to look beneath the surface. As they say, don't judge a book by its cover, and in today's markets, that adage has never been more relevant.
That's so true. Taking a broader look at the news landscape, one can't help but notice that each of these stories is so interconnected. The cautious optimism in traditional equity markets, the heady gains in the cryptocurrency examples, and the regulatory challenges facing players like Robinhood, it all paints a picture of a market that is, in essence, experimenting with multiple narratives simultaneously.
Exactly. Whether you're a long-term investor or a day trader, these stories serve as gentle reminders that each move in the market often has hidden layers, and that diversification, in both ideas and assets, is a crucial strategy for navigating uncertain times. Now let's pivot to our detailed sector analysis. In the technology domain, the conversation is largely centered around big names like Nvidia.
Right. As we observed earlier, with Nvidia's shares reaching record levels, the discussion has naturally veered towards how investors can adapt using a blend of direct investments and derivative strategies such as options. This strategy not only aims at tapping into the growth of leading tech innovators, but also endeavors to mitigate the inherent risk of investing at peak valuations. It's quite like enjoying your favorite dessert without overindulging. You want the sweetness without the subsequent sugar crash.
That's a great way to put it. Meanwhile, in the energy sector, although not explicitly mentioned in our breaking stories today, underlying trends such as the push for greener initiatives and evolving energy policies continue to reshape the narrative. With governments around the globe committed to reducing carbon footprints and diversifying energy sources, companies in traditional energy spaces are finding themselves in a delicate balancing act. Some are investing heavily in renewable ventures, while others continue to bolster their legacy infrastructure. How these dynamics play out in the coming months could very well influence the valuation multiples of energy companies, adding another flavor to our broader market soup.
Another layer to the market soup. And in the financial sector, we're observing a fascinating interplay of technologies and regulatory scrutiny. The case of Robinhood serves as a prime example. Innovative platforms that have democratized trading must now navigate the increasingly rigorous regulatory landscape. Financial institutions are being forced to evolve, integrating both cutting-edge technology and robust compliance frameworks to ensure that they remain competitive. This balancing act is reminiscent of trying to juggle while riding a unicycle. Impressive if done right, but with plenty of room for a misstep.
A unicycle while juggling. That's a perfect image for the financial sector right now. And as we expand our scope beyond domestic boundaries, global market implications come into sharper focus. BNP's bullish stance on the S&P 500 and the Eurostoxx 600 is not merely a domestic affair. It has far-reaching implications. When major economies commit to spending and infrastructure projects, the ripples are felt across borders.
Exactly. Investors with international portfolios should pay close attention to these developments. After all, what happens in one market can often serve as a precursor to trends in another. The global financial ecosystem is more interconnected than ever, and shifts in investor sentiment in one region can rapidly cascade across continents, affecting commodity prices, currencies, and emerging markets. And what about local developments like the Robinhood investigation?
Good question. Globalization means that risk and opportunity are two sides of the same coin. The recent regulatory investigations, such as the one involving Robinhood Crypto in Florida, are a case in point. These local developments might seem isolated at first, but for those with exposure to financial technology and the broader digital asset market, such stories serve as alerts. They remind us to consider both domestic and international risks when constructing our portfolios.
So true. Looking ahead with expert insights and predictions, many industry veterans are reiterating the need for a balanced approach in these volatile times. On one hand, the robust performance of digital assets is pushing many traditional investors to recalibrate their strategies. On the other, caution is warranted as markets continue to oscillate between optimism and caution.
Absolutely. Experts suggest that investors pay close attention to evolving policy changes, fiscal stimulus measures, and global economic indicators. For instance, if government spending continues to drive capital expenditure, what many are calling the CapEx Supercycle, then we could very well see a sustained period of upward momentum in equities. However, risks remain, such as tightening monetary policies and geopolitical uncertainties, which could disrupt even the most promising upward trends.
It's always a balancing act, isn't it? And, sometimes the market can feel like it's taken a course in suspense that rivals a thriller movie. Have you ever noticed that following a surge in one asset class is sometimes like trying to guess which character in your favorite TV series is going to get written off next? It keeps the adrenaline pumping, but also reminds us that unpredictability is the only constant in our markets.
Oh, absolutely. And hey, if the market were a stand-up comedian, it would probably say, "I'm so volatile, even I don't know what I'm going to do next." It's this unpredictability that keeps us all on our toes and makes for great conversation topics over our morning coffee.
It really does. So let's tie together some key takeaways from today's briefing. First, remember that while the major indexes are showing modest movements, they are quietly setting the tone for the day ahead. The S&P 500, Nasdaq, and even the Dow have their own stories to tell, and each percentage change, no matter how small, can be a critical clue to future market behavior.
Second, in the realm of cryptocurrencies, the significant increases in assets such as Bitcoin and Ethereum are worth close monitoring as they signal a broader trend of renewed investor confidence in digital assets. However, these gains are not without risk, and the regulatory environment, exemplified by the Robinhood story, remains a wild card.
Third, Our deep dive into important stories has shown that there is a prevailing sense of cautious optimism, powered by themes like the, quote, CapEx Supercycle. BNP's bullish projections for both the S&P 500 and the Euro Stoxx 600 underscore the belief that robust government spending and investment in infrastructure can create the perfect storm for sustained market growth. And fourth, with option strategies being highlighted in the tech sector, investors are reminded of the importance of risk management, especially when dealing with high-flying stocks like Nvidia.
And finally, from a global perspective, the fact that every region is interconnected means that no market operates in isolation. Domestic policies, international trends, and even local investigations, such as the one involving Robinhood crypto, can have ripple effects that underscore the importance of maintaining a diversified and dynamic portfolio.
Before we wrap up this morning, John, I'd like to leave our listeners with a few thought-provoking questions. How will the ongoing regulatory scrutiny affect the delicate balance between innovation and compliance in the financial technology space? Are we on the brink of a new wave of institutional adoption in cryptocurrencies, or could heightened regulatory measures dampen that momentum?
Excellent question, Sarah. And when it comes to navigating high-valuation tech names like Nvidia, will traditional buy-and-hold strategies give way to more sophisticated options plays that help manage risk more effectively? These are questions that not only influence our immediate trading decisions, but also our long-term investment philosophies. I invite you all to mull over these as you consider your own strategies for the coming weeks. It's important to remember that while the market can surprise us day in and day out, having a structured approach to managing risk and seizing opportunity can make all the difference in our financial journeys.
Absolutely. And in closing, we want to extend a big shout out to PantheonAI, your information co-pilot, for continuously empowering us with data, insights, and the context we need to navigate this complex landscape. As we sign off today's discussion, remember to stay curious, keep questioning, and always be ready to adapt. Come back for the next episode tomorrow, and feel free to engage with our AI co-pilot if you have any burning questions about your investments or yesterday's events. And as we like to say here, learning shouldn't feel like a full-time job.
Well said, Sarah. Thank you for joining us on this deep dive into the markets on this fine July 11th, 2025. Until next time, invest smartly, stay skeptical of any one-size-fits-all advice, and keep your sense of humor. It's often the best compass in times of market turbulence. Have a great day and happy trading.
PantheonAI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.